Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. We are now in February. Where the hell did January go, guys? I've got no idea. But I'm here as ever with the wonderful Tom and Francis. How are you doing this week, Tom?
We are very happy to be back. Like you said, January flew by, and we're hoping for a bit more news in February. I feel like it started to ramp up a little bit, but January is generally a slow month. But we're hoping February is the month where it really kicks off and we can start 2024 properly.
Yeah, it has been a very slow start, but I'm sure it will pick up soon. Francis, how are you doing?
Doing very well, Polly. Welcome back. We missed you last week. Yeah, like you guys have already said, it started off very slow in January, but things have been picking up, and our focus next month, or this month, I should say, in February, is going to be paytech, which is definitely a hot topic. Everyone always loves to chat about paytech, so no, it should be an interesting month and definitely a month to keep an eye on the site.
Awesome. And what are you guys going to be talking about today, Francis?
So today I'm going to be talking about current account switching, surpassing 10 million switches as the UK becomes more money savvy.
Awesome. And Tom?
This week I am going to be talking about a new Fintech Talent Hub that's been launched by TechTrust to try and help close the industry skill gap.
Fantastic. And I'm going to be talking about bank closures again, and our favourite topic over here, which is financial inclusion. But Francis, I'm going to let you go first because your article has intrigued me. So we'll do a bit of a banking sandwich with me and you and then Tom in the middle.
Sounds good. Thank you, Polly. So the UK's current account switching service is celebrating surpassing 10 million total switches since its inception, following its busiest ever quarter, apparently, in Q3 23. So the current account switch service is a free UK service helping consumers to switch a current account from one participating bank or building society to another in 7 working days. It's designed to be simple and stress-free, and the full switch option is backed by the current account switch guarantee. So between October and December 2023, the current account switch service facilitated over 433,000 switches since it was launched in 2013. And the timing of the uptake in the switching suggests that consumers and businesses are analysing their finances as well as the services available to them more closely, especially as the cost of living, inflation and interest rates continue to rise. One of the main reasons for the success of the switch service, I should say, has been the demand for online or mobile banking. 44% of the respondents said that this was the top reason that they preferred their new account. Following this, interest earned was the second most important reason, with customer service and the location of branches, which I think is going to be a nice segue into your article, Polly, coming in at the third and fourth reasons respectively. So an interesting stat that I got from this article really was who or which companies really saw the most success. So from July to September 2023, NatWest enjoyed the highest net switching gains with an uptake of nearly 60,000 new customers, according to end user data, which was followed by HSBC, TSB, and RBS. So the main thing that I wanted to discuss with you guys today, I suppose, or at least one aspect of it all, I'm a little bit surprised that challenger banks aren't seeing more success. I think, especially when you look at the fact that online bank on mobile banking emerges as the top reason for people wanting to switch accounts, it comes as a bit of a surprise to me that we are seeing traditional banks see the most success for switching accounts. So, yeah, I mean, I wanted to hear from both of you to sort of see your views on the article as a whole, but also on that specific topic as to, you know, why you think it was the traditional banks that are still seeing the most success, really. So, Tom, I'll go to you first.
Yeah, I think it's a really interesting point that comes up in the article. Obviously, the traditional incumbent banks seem to be getting the best results from the switching service. And considering the comments from Which in the article, you know, they say even they're a bit surprised because some of the banks that have done so well rank at the bottom of their customer satisfaction. So they think people might be moving over, but then only to be disappointed later on. And I think that really shows the pull that these banks have regardless, just via their reputation, we often talk about how good some of the offerings from challenger banks are, but they still haven't built up that reputation and trust with the general UK public that the incumbents have. So, with that respect, I think it's important to keep in mind just how important and effective that trust and domination of the market is as the challenger banks try and catch up basically with their domination, I guess is the right way to say it. But what we might see in future is I think over time challenger banks are bound to get more and more trust if they continue in the sort of the vein that they are. But obviously something we're going to be talking about soon is the importance of physical locations in banks. But maybe that is another reason why some of these, the likes of TSB and NatWest are doing well, is because they do still offer physical locations, albeit less than perhaps 10, 15 years ago. But for a big proportion of the population still, it is important that they have that as an option. So I think it'll be interesting to see, where that landscape goes in 10 years, because I think realistically more and more bank branches are going to close, and that might actually lend to challenger banks because it's one thing that they're not offering at the moment.
No, I completely agree with you. And I think it will be really interesting to sort of see what challengers can do to really, I suppose, overtake the incumbents. I think what really stood out to me though was the stats of it all. I mean, like I said, the NatWest enjoyed the highest net switching gains of almost 60,000 new consumers, which was followed by HSBC with 25,000, TSB with 15,000, and then the Royal Bank of Scotland with 6,000. And I think what really surprised me was just how big of a drop that really is from first to fourth place. And the fact that at no point do challenger banks really come into the conversation. I think that was almost what surprised me a little bit more, because I do completely agree with you. I think there is probably a question of trust that challenger banks struggle with, purely for the fact that they don't have the years of reputation build up that the incumbents do. And that is definitely something, especially when it comes to finances, people want to deal with trusted establishments. But regardless, I still think I don't know, maybe it's just me. I'll get your thoughts on this, Polly, as well. But I don't know. I think it's just a bit of a surprise that there weren't more than 6,300 current account switches to a challenger. What do you think?
I definitely agree with everything that you guys have said so far in terms of like reputation and trust. And I think when it comes to banking, trust really does go a long way for consumers, and you want to put your money with, the bank that you think is going to look after it the best. And that oftentimes does mean just a name that you recognize. And I think that's something that even I'm guilty of sometimes. Like if I want to take out like a new credit card or insurance or something like that, I'll always pick a company that I've heard of, even if it's not necessarily like the best deal or the best like options that are involved with it. But because I haven't heard of them, I'm already like, oh, don't really trust them very much, even though, obviously I know that's not the case. And I think that's very true when it comes to people who are maybe in an older generation than us. Because like if I think of like my mum and dad who are in their late 50s, they have no idea who like Starling are or Monzo or like any of the big challenger banks that are out there. And like I think it would be the same like if they did their research to try and like find a new bank to join, it would pop up being like, oh, Starling Bank does this and this, and they'd go, oh, but I've never heard of them, so I'll just stick with their HSBC, the NatWest or whatever. And I think as well a case, even though that the current account switching services are like really good and like fantastic, and obviously as you've seen in the article a lot of people are using them, I still think swapping banks feels like a complicated process, even though it isn't necessarily. Like I know obviously we've got the switch service and it's all about making things as easy and as simple as possible, but when you like sort of sit down and think about swapping banks, just feels like one of those admin tasks that feels like it's going to take forever. And I think that definitely puts people off. And again, that's something that I'm guilty of. My mum opened me a bank account when I was 16, and I still have that bank account as my main bank account just because that's the one I've got. So it's easier to do that one. And I think it's all a culmination of all these things mixed together that makes sort of switching bank accounts and switching to challenger bank accounts specifically less popular. And as well, I don't have anything to back this up because I would need to research, but I think a lot of the reason that people switch banks isn't necessarily for the features or any other like cool things that they might offer. I would say that it's probably more likely because they have like a financial incentive, and especially I think the article talked about how, like, around Christmas the financial incentive is obviously going to be a lot more popular because you want a bit of extra cash to spend. So if HSBC is offering you £100 to move to their current account, and Starling Bank is offering you nothing in this theoretical example, then you're going to probably go for the £100, because why wouldn't you? So I think it's a lot of different factors, a lot of different issues, and again, I think it does come down to a little bit of education, not to harp on, because I know we talk about like financial education loads, probably too much, but I think it does come down a little bit to that and awareness, because I don't think many people are aware of the different services they can have. I don't know. I mean, again, this isn't necessarily based on anything, but like, how many people actually know about a current account switch service, about the current account switch guarantee? And I think once we kind of get that awareness up, we're just still, with people like Which, who are in the article, and then even like other sort of like consumer champions, or whatever you'd call them, like Martin Lewis and stuff, and people on the telly and things like that. It's getting there, but I think a lot of it comes down to people just don't know that it's a thing that they can do, and it's a thing that's simple to do. So yeah, it's interesting to see the data in the article though, and I wonder if things will change as we move forward into the year.
No, I 100% agree with you, and I really liked your point about it sort of being an admin task and being this daunting thing that people just really want to put off for as long as they can, really. Because I think I completely agree with you. It's one of those things where it is very simple, but for whatever reason, historically, it hasn't been. And because of that, people now are a bit like, oh, do I really need to do this? If I don't, then I'm not going to. And then it's like you said, when it's an admin or a chore almost, you not only do you not want to do it, you also don't want to do the research into finding the best one for you. And then that sort of results in, like you said, just going to a name that you recognize, which it's not you just that's guilty with it. I think I definitely am too, and I'd be willing to bet that Tom is as well. But yeah, I don't know. I think it'd definitely be interesting to see where or how this changes throughout the year, or maybe not so much throughout the year, but over the next 5 to 10 years. I think will be, like you mentioned earlier, Tom. I think that will be where we really see the differences as more physical branches shut down. If that continues to be an ongoing trend, I mean, I'm sure we'll talk about that in a minute. But yeah, no, it's definitely a space to keep an eye on. So yeah, Tom, why don't we go to your article next?
Yeah, of course. I'll offer a little segue away from banking for a little bit. So, as I mentioned at the start, essentially a tech staffing firm, namely TechTrust, has officially launched a new online talent hub, which is exclusively focused on the fintech industry. And it's basically a new talent database aiming to support the industry with top tier technical expertise. So, the firm, which is situated in New York City's financial district, basically tries to equip fintech leaders with a pool of vetted technical experts to enable efficient attraction, retention, and nurturing of top software and IT talent in the US. And according to a recent MIT Technology Review study, over 50% of global tech leaders are concerned about a shortage of candidates, with 64% also citing a lack of necessary skills or experience. And this skills shortage in fintech is something we've spoken about a number of times before. And I think this sort of new platform could be a big have a big impact, I should say, in the US. But basically, this new FinTech Talent Hub looks to serve as a comprehensive catalog of all of the top technical talent specializing in the fintech sector in the region to try and fill this skills gap that exists. And the reason this kind of caught my eye is because it kind of got me thinking, as you know, we talk about the skills gap a lot and the importance of training people up and education in the first place to get people attracted to the fintech industry. But I was wondering, do you guys think this is the type of process and the type of platform? Could this be just as important in closing the skills gap? Or do you think this is more of a luxury and a nice to have, and the real solution does lie in education and training? Polly, what do you think?
That's a really interesting question. And I think, to be completely annoying, I think it does go hand in hand. It's a bit of both, not to sit on the fence too much. But I do think, hubs like this obviously are great, and it's great to see people putting effort into kind of closing the skills gap and helping with the talent issues, and, having, you know, a big old pile of CVs of people that you can hire for your job when you go to look for your recruitment processes, obviously is going to be really helpful. So I definitely think that, things like this aren't in any way, I can't think of a negative of having, a talent hub like this. But I do think there is obviously still something to be said about sort of education and encouraging people to go into this kind of work. I mean, I don't really know what they teach in schools nowadays, but do they still do like coding lessons? I'm sure someone told me that they started doing that in like IT. And I do think it would be, there needs to be a push of people into sort of coding and other tech like jobs as well, and just to encourage people into them. But also I think part of it does come down to the fact that a lot of fintech by its very nature is, startup based, and working in a startup can be difficult. Obviously it can be long hours for not a lot of pay, or trying to get your product or service or whatever it is off the ground. So it can be, not necessarily the working environment that you want to be in, but it's kind of the graph that you put in order to get your product up. Or maybe you put a stint in a startup and then you move on to a bigger company, that sort of thing of how careers work. So maybe that's not necessarily, encouraging people to come in because they don't want the startup hustle life, which is absolutely fine. Not everyone does. And I think so it all kind of comes hand in hand here, but I think there definitely needs to be certain things that are done. And I think a tech hub is a really great place to start, and having somewhere to, show off your high in demand skills and people with those skill sets is incredible. And it's helping, I guess it's helping people who are hiring and people who are looking for jobs. But I think the skills gap needs more than just the talent hubs, because the talent hubs are just showcasing the people that are already in the industry that already have these skills. I think the skills gap goes beyond that, and we need to get more people learning, because as we've learned from speaking to people, there aren't enough people in the industry to go around. So merely sort of showcasing them goes a really long way, but not quite far enough to solve the problem, I don't think.
No, absolutely. Yeah. One thing that caught my eye when we looked at the initial press release from the company explaining that this had happened was that their sort of tagline in the headline was like, "Oh, it's better than LinkedIn." I kind of like that approach. It's like almost like a LinkedIn where you're being vetted before you're allowed in. But that kind of solution certainly, as you said, could be good on both sides for those looking for jobs that are on it, but also for employers to see, okay, this is a whole group of people that fit the profile. They've all been vetted. We know they've got the required skills, and it makes it a lot easier to find the talent where there isn't a lot really. As you said, there's not enough people in the industry. But I think, ultimately the only solution for that is this is global, but to get a lot more funding in the industry. One thing that's going to entice people is financial incentives. You talk a lot about how much of the industry is startups, and people might not be wanting to go into that because of the risk involved. And this is just something that, more money, more cash flow, more funding could solve, make it less of a risky industry if these firms have the backing and therefore can hire far greater numbers of people and attract people with the technical talent to come into fintech rather than getting poached by another industry. So I think it's a really interesting area. But this type of platform, like you said, it can surely only provide a positive impact on the industry. But Francis, I want to get your take on it as well.
I don't know if you guys will necessarily agree, but I think a lot of it sort of lies with almost company ethos as well. I feel like a lot of companies don't want to nurture new talent anymore, or potential talent. They want sort of established, experienced, top tier talent from the get go. And I feel like a lot of the time, especially for startups, there has to be this attitude of we're going to work our way up together. And even from a scale up, even then, I think it's a case of you don't necessarily need to get the best person with the best qualification immediately, because you're going to be able to find some people that are willing to put in those like tough hours, who are willing to put in the time and effort to really understand their craft and really improve on it, which not only will have a long-term impact of making the company more attractive for those initial people that do have all that experience that companies obviously want. But I think what I was trying to say was that in looking at TechTrust and what it offers and sort of the hub that it provides, I think it is very, very good. But I think it's kind of like you guys already said, it's just, it doesn't feel like it's necessarily expanding the pool. It's just sort of saying, well, this is another way that you can access the already limited amount of talent that's here. and it doesn't really feel like it's making that a bigger pool, really. I don't know, maybe that's just me, but I think the real issue lies with organizations that don't want to sort of almost take a chance. I feel like that it's a bit ironic, because how can an organization expect an employee to take a chance on them if they're not willing to take the chance on the employee? So I feel like there's got to be a sort of a mutual, I don't want to say gamble necessarily, but there's got to be a certain level of risk that's got to be taken by both employer and employee.
Yeah, absolutely. And when we look at, you can look at adverts for jobs, and sometimes you think the experience that they ask for, whether this is in the fintech industry or beyond, we want 3 to 4 years experience in this specific role. And you think, this is kind of an entry level role. It's like, if I'm not getting it from the experience from you, where was I supposed to get it? And I think you're right. There's certainly something that firms across the globe are probably guilty of for doing, and it's something you can see in any industry. It's not just the fintech industry, but like you said, I'm sure that there is an element of risk that firms should be recognizing, and maybe putting a bit more time into new employees to get them trained up to where they want them to be could be a way to expand that pool and give people the back end, and therefore probably make them stay in the fintech industry because they think this is a good industry for me. I've been backed by this company. They see the opportunities once they're in the industry from elsewhere as well, and they're more likely to stay there. So that's one way to expand the pool for sure. But yeah, I think there's a lot of work that needs to be done. It's a global issue, and it doesn't seem like there's any one region that's really smashed it yet. Even though there are a lot of initiatives going on, so it'll be interesting to see what areas do see a good uptake in the amount of talent available, and whether other regions and places can kind of take those schemes and apply them where they are as well. But to take a step away, I should say, from this, and we'll go back into banking. How about we go to Polly's last article?
Awesome. Thank you, Tom. The banking sandwich is complete. So, the one I want to talk about today is how there are some concerns over the financial inclusion gap in rural areas amid more bank closures. It's kind of the same old story, really, one that we've heard so many times. But Lloyds Banking Group is shutting down its mobile van banking service this year, as well as closing 123 branches, sparking some concern over reduced access to essential financial services, particularly in rural and underserved areas. So, according to Lloyds, each mobile branch helps 14 customers on average, with visits falling by 90% since 2019, and some locations having as little as 2 customers. The banking group has also said that only 8% of its customers chose to use a branch exclusively to manage their money. Lloyd said it will be sending out 32 more community bankers to provide face-to-face banking support in areas where a mobile branch is stopping alongside the existing network. So obviously, as what happens when kind of anyone closes bank branches, people aren't very happy about this. And according to research from Which, nearly 3 million people will live in a parliamentary constituency without a physical branch by the end of the year, because they're just closing so quickly, essentially, with over 5,800 branches of banks and building societies shut since 2015, which is around 54 per month. So I think, obviously, when we kind of have this conversation about bank branches, I think we always kind of obviously start with financial inclusion and the idea of helping the underserved in the community. Obviously, there's a lot of people who don't live near a major town or city that may still have a bank branch. There's a lot of people who couldn't get to them even if they wanted to. And I think always the argument that comes up sort of in favor of closing, but not necessarily in favor of closing bank branches, but on the flip side of it, and this thing that is sort of talked about in this piece as well, is how people want to move to online banking almost exclusively, and how online banking is better for the banking industry overall because it is just easier to manage, and digital banking is just a bigger benefit to people, and you can do most all of the services that you need to do online. But then, of course, we've had this conversation before in terms of not everyone can use online banking services, or not everyone is able to. And also, a lot of the time, there are still some things that you do want to do in person, and there's some things that you can only do in person, maybe like depositing cash and things like that, or, you want to speak to an advisor about something. So it's a really tricky situation, one that we've talked about a lot before, one that, a lot of other people I've talked about a lot before, and the idea of sort of this branch banking versus digital banking has come up time and time again. So I guess I wanted to talk about it today in light of sort of this recent news of Lloyd's, and kind of just get your thoughts about what you think about the banking industry. Like, are we going to go fully digital? Is that the plan? Is that just what's going to happen? Are all bank branches just going to go? And we are going to go fully digital, and you'll see, maybe a couple of banking hubs here and there. You'll still be able to use the post office to do banking services, and every now and again, I don't know, someone will go to the co-op and be there for you to do your banking every other Tuesday or something like that. What do you guys think is going to happen? Are they going to cling on, or are we just seeing sort of the start of the end, really? Tom, I'll go to you first.
I feel like from my point of view, you've kind of got it spot on there with the whole. I feel like we're going to see eventually them all phased out, because like even in this situation, they're seeing so few people actually use their services. They're seeing as few as two customers in one single branch that they're serving, and for Lloyd's, it just doesn't make sense to be putting the money into hiring employees to run this service to serve two single customers in that area. And I think that is just something that is going to continue as more and more people do turn to digital offerings. It becomes less and less financially important, or it doesn't even make sense financially for firms to offer these services. So even though we talk about the importance of financial inclusion, I think banks are probably at quite a difficult point now where they think, well, they understand that that's important, but equally they're just losing money and for not much purpose, in the sense of they're serving so few people. It just doesn't make sense to put however many thousands of pounds, or even more than that, into keeping an area open for however long to basically do nothing on certain days of the week. So I think, like you said, what I expect to happen is, maybe we do get banking hubs in public areas, that kind of where you have different bankers from different banks at certain days of the week, whether that be in public areas like libraries, or shops like the co-op, as you said. I think they really, I think that is the way it's headed, unfortunately. And whether that means that more people, especially the older generation, do struggle to find the support they need with their banking, that could well be the case. And you just hope that these kind of solutions do come in quickly enough and often enough to ensure that people are still covered in some way, whether they have to wait a few more days to get someone to come into their area. That might be the case, but I guess it's better than nothing. It's obviously not the ideal situation, but the more people that uptake completely online banking, I know I'm one of them. I think in an ideal world, if I can speak to everyone online and I don't have to actually go anywhere and spend money getting to the bank, that's always a bonus for me. But obviously people don't view that. But I think more and more people are taking that kind of view, and they are taking that attitude now. So I think it's quite likely that in reality, in a few years' time, I don't think bank branches as they exist today, even though they barely exist today, will continue. And I think, we're more likely to have this kind of more communal banking areas, and it'll just be interesting to see what kind of form they do take.
Yeah, I completely agree with you, and I think the rise of the banking hub, I think, is going to happen. I guess the question will be is if it will come quick enough. Obviously, if they're going to be, if more branches are going to close sooner rather than later, it's can these banking hubs come up quick enough to sort of serve the customers that are still using them? Because obviously, yes, for Lloyd's, each mobile branch helps 14 customers on average, but that's still 14 customers that need services that are not being met by online banking. So I think that'll be really interesting. Francis, what do you think?
Again, I mean, it was only a matter of time before the whole devil's advocate thing returned, I suppose. But I'm not sure I agree. I think that physical branches and actual banks, that I don't think they're ever going to completely phase out, despite what everyone seems to suggest. I know there was an ad that I've seen on TV with Dominic West for Nationwide, where he sort of talks about, oh yeah, we're going to get rid of our physical bank. We don't need that thing below us. And then the employee next to him goes, oh, but look what Nationwide are doing. The happy customers are going there and they're being able to interact with their banks. And I think that the fact that they're really picking on that to really make a point and say we are still emphasizing this face-to-face banking value that a lot of people, well, to say whether they want it or not is one thing, but despite what the stats might show, it's still something that people are after. And to be honest, what I found really interesting from the article as well was the fact that NatWest has closed the most branches, the most of any banking group. And when you match that with the stats from the article that we spoke about before, NatWest were also the company that had the most current account switches. So I found it interesting to sort of show that people are still going to these incumbents and they do trust them, but for some reason the incumbents still think that the branches aren't the way forward. And it's kind of like you both said, it's a matter of cost and it's probably not worth it. But I think if we are going to go all in on the digital aspect of things, as you guys have sort of perhaps alluded to, I think if that was the case, then wouldn't you see challenges really skyrocket in popularity, considering they are exactly that? They are the experts in the digital world. Whichever way you look at it, despite sort of stats of adoption of what the incumbents might be doing, I think that it's undeniable that challenger banks have been raised and born and bred out of the digital world. So I think, unfortunately, I do think it is going to be a continuing trend that we will see some branches close down. But as I said, because like Nationwide, for example, are noticing that and are noticing that people do want to still have their branches. Otherwise, they wouldn't have made an ad specifically tailored to say we are still offering in-person offerings, I suppose. I don't know. I think it is definitely an interesting topic and one that will definitely have a different, viewing point in a few years' time. But I'd be very, very surprised if we saw a complete phase out of physical branches.
That's a really interesting viewpoint, Francis. I welcome your devil's advocate this week because I like it and it's positive rather than negative. But yeah, I think it'll just be. I think as all. Oh my god, if I can speak. As with all of our articles this week, I think it's going to be one of those things that we wait and see what happens. But thank you guys so much for bringing your pieces this week. If you want to hear any more about anything we've talked about today, head on over to thefintechtimes.com where there's plenty more news and insights over there. And we'll very quickly do what I learned each week. So each week, so much new news and information crosses our desks at the Fintech Times that we are learning something new every single day. So Tom, what have you learned this week?
This week, I learned that as debt levels have risen to near record levels in recent years, a recent TransUnion study found that only 30% of US consumers are actually monitoring their credit to keep an eye on their overall balances.
Very nice. And Francis, what have you done this week?
I kind of alluded to it at the very, very start, but this coming month is going to be our paytech focus. And what I learned is that paytech is a very, very hot topic because we've had over 120 different companies and experts in the industry contribute their views and opinions for our article. So definitely be in a good month.
How very, very exciting. Love that. And then what I learned this week is that Greater Manchester has wheeled out Starling Bank bikes, and Starling Bank has become the first sponsor of the Greater Manchester Bike Hire Ski, which I just thought was quite nice and a little bit fun. But anyway, guys, thank you so much for joining me this week. It has been a pleasure, as always, to talk about fintech with you. And I will catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.